And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Hello, everybody. Welcome to the Coach's Playbook, a Mickless edition today. So we'll try and have fun. Dan, I understand you have a shout out before we get to the topic.
I do. We've got Kelly Martinez is up $3,139 this morning.
Good job,
some
Kelly.
Trades in the NQ.
I have a feeling that if she's up today, she's probably doing a little bit of what we're talking about today, which is trading the counter trends and how that's different than when you go with the trends. We have an article that's coming up soon in the blog, JD, that you submitted. I'll let you kick it off today. Also, welcome, JD. It's always a pleasure to have you here, about trading counter trends. And I thought maybe you could give just like a real brief overview before we kick this off.
Absolutely. And thanks for having me. I always love joining you guys. So thank you. So basically what you are looking for in a fade trade is just to kind of catch a short-term reversal or a pullback, basically trying to pick a quick top or bottom. There's nothing wrong with counter trend trading, but one of the key things is you need to be really good at market timing. An effective counter trend should it should lower your risk and expand your reward parameters a little bit. So a good counter trend trade should be low risk, high reward, I should say.
There were some really fascinating stats in the article. And generally, I think it's important to say the big caveat of this, it's easier to go with the trend. That's probably where you should be living. You can do both, because we talk a lot about having asymmetric opportunities, going with the trend, and basically having higher correct rates of trades. Whereas if you're trading real reversals, picking tops, picking bottoms, your correct trade rate, your hit rate, is going to be lower, which means you got to take them for more, right? If you're only be right 20-30% of the time, you want that like 10-to-1 risk reward on some of these. And the other interesting stat, just to prove the trend's easier, is it's an anecdotal stat, but he mentioned that a retail broker he had talked to said that 3/4 of the retail traders were trying to basically call tops and bottoms, go against the trend. And they were essentially 3/4 of them were not profitable. They're getting wiped out. It's much harder basically to go counter. And Hogue, you have a lot of experience in all types of markets. You're a trend guy. What do you think about counter trend trading?
Well, I'm a trend guy, and I'm also a contrarian, so I get a little bit of both worlds in that. And it's been my experience. The pit traders always seem to like the short side, and when the S&Ps are always ratcheting to the upside, you had a handful of traders that seemed to just have a real knack for being able to pick the tops. There was a guy in the S&P pit who used to joke that the longest he ever was short 10. So if you're going to be trading on the short side in a market that's moving to the upside, you'd better be really good at it. And I think that there is, I think there's a way that you can find intuition involved in this, but it's going to be costly to find that intuition. Everybody knows that when you're with the trend, it's going to be a bigger opportunity. You're not going to have to work as hard. You're just going to let the market kind of take you along with it, and you're going to have some pretty good days. To be a contrarian, to be somebody who's trading against the trend is some people call them, trying to pick the tops, trying to pick the bottoms, whatever you want to call it. You can survive and you can thrive that way. I find that it is much more important to have very low risk in those trades and very specific profit targets. You don't want to fall in love with a trade that's contrary to the bigger picture because it's only going to give you so much. So again, you're going to be able to limit risk. You're going to get stopped out a lot, but if you do get one, make sure that you take a profit at a really good level, a really, maybe it's some sort of technical pullback, whatever it is that you're looking at, but take profits on trades that are contrary to the bigger picture. Something you really, really have to do, because you can have a great trade and 5 minutes later it's gone and you're taking a loss in it. So
you can't trade it like a normal day trade where you're just looking for, a 2-to-1 risk reward, because you're going to be right less. And just to correct my stat from earlier, the broker said that 3/4 of the retail clients traded against the trend. I believe that 100%. We see it a lot. People choosing tops, people buying fallen knives. We've talked about that before. And 90% plus of the people that were doing that were not profitable. So it was kind of how that 10% was different. Dan, I'll let you jump in the game. We're going through a little bit of a counter trend now the past 2 days. So we talked about Kelly earlier, was likely, I'm going to guess, long NQ today.
Yep, absolutely. Well, the first thing I really want to touch on, right, is what time frames you're looking at. Trend is not determined by a 1-minute chart or a 5-minute chart. You're not seeing the whole picture. So first and foremost, determine your trend probably on a daily chart at the very minimum. That's really what's going to tell you what the market is doing. For me, you guys probably have heard me talk about it once or twice in the past, but channels, or as Hogue calls them, I think Danels. That's when I'm going to find my counter trend trade, right? I look at a market. If I define my channel, I can set it to any direction and it's going to create a framework for me. And I'm looking, if we're downtrend, like we've seen in the equities over the last several months, we've seen a downtrend move in the equity market. If I see that market on a daily chart come towards the low side of my channel, that's where I'm going to start to look for initiating some sort of counter trend trade. I am not picking a bottom. I'm not saying, okay, the downside move is over by any means. No, there's going to be more opportunity based off of my strategy to the long side. And I'm not looking for that long side to get all the way up to the high side of that channel. Not quite. I'm looking for just a small move right off that level, because that to me is where my opportunities are and I'm managing my risk. And so I'm looking at it on a daily basis. If you're looking, the 1-minute, 5-minute charts, you're missing a major piece of the picture. You're seeing something completely different. And we got to remember that higher time frame really holds more weight when it comes to long-term directional moves. There's a number of things that you can be looking at to kind of confirm this. One prime example is looking for volume divergence, right? If we see a divergence on a daily chart, that volume's starting to slide off and we're coming to the low side of a channel, we have some confirmation that, hey, the bounce may be coming, right? What are the basic principles of volume? If volume is continuing to increase, look for direction to continue. If we see that volume start to fade away, look for that market to hold or possibly bounce or rotate in the other direction. You can apply that principle to a daily chart as you're approaching some other key levels for yourself to look for that move. But I think at the end of the day, this is not a long-term move. You're not counter trend trading and picking a buy or reversal trading in a sense and saying, here's the bottom, the bottom's in, I'm buying this and taking it to the moon. That's not going to be the case, or vice versa. So really make sure you're defining your process before you're getting into that trade, what you're looking for and where you're looking to get out. Really have that plan set in place. That's going to be the big tip I have.
Dan, I think you just described the easiest way we'd recommend trading, especially if you're going to fade, which is different than picking tops or bottoms. It's basically the trend is going to be on the day chart. You look at the equities or anything else, the trend is on the day chart. Don't look at anything too much shorter than that. And then when you go down to your hourly stuff, all right, that's when you can catch the counter trends that you fade. If we're in a downtrend, a long downtrend like we have been, like granted, you would have got blown up yesterday. Probably would have wanted to sit around today and see what happens. But as Dan described, we're up huge right now. Volume's down compared to yesterday. Those are the sort of channel trades that are a good way to fade. And that's more, your risk reward doesn't have to be as high on those sorts of fade as opposed to just, I understand the human instinct of you see something that looks cheap on the chart and you see something that looks expensive on the chart. You want to sell what's expensive. You want to buy what's lower, but you got to think, why is this happening? Why is no one else buying it? Why don't
Well,
they think it's cheap, right?
And I think that's something you have to keep in mind. If you're going against trend, I mean, what is the first little cliche you're taught in trading? Trend is your friend,
Mhm.
right? Like that's cliche number one. If you're counter trend, if you're going against what that trend is, if you're going against cliche number one, you have to keep in mind how much heat you're going to take in that trade. If it's starting to take a lot of heat, that counter trend's probably not going to be there. So you want to manage your expectations going into that trade. If you're looking for a counter trend, make sure it's getting to those pivotal points where you really do envision an opportunity for it to bounce. Just because, we're approaching low side of that channel, or, we're making lows, but we're seeing weaker volume come in, we may have an opportunity to rotate this thing higher. We do know how much these markets can move, and levels are not guaranteed areas of inflection. They're areas that we may see an opportunity, but there's no guarantees, just like anything in trading. So if it starts to rip against you when you take that long, well, you know what? Maybe there was enough pressure finally at this key point that the market broke through and is extending the range lower as opposed to catching that bounce. So many variables come into play, and you really want to be ready to get out of that counter trend trade.
Yeah. To correct something dumb I said earlier, I don't know if volume's lower today yet. I'm used to doing the podcast at 3, Dan. So I just saw that the volume was way down. I was like, oh man, I would go short this right now. No, we still got some time, power hour to add some volume there. Does anyone else have anything they would like to add about counter trend trading or the markets now in general?
Yeah, I think another important thing to keep in mind is that when you're fading the trend, if you miss the trade, just consider it gone. There's no sense in trying to chase the market when you're just trying to catch a quick pullback or something like that. Not only does it work kind of counter to your risk plan, but it doesn't take much for some of these markets to sort of start moving back in the direction of that underlying trend. It can happen real fast too. The market will always return to the path of least resistance, and it can turn on a dime, which we do see quite often in these markets. So don't go chasing after you miss it, if you miss it.
It's a good point there.
It only increases your risk on that trade. So, one of the things about, the last couple of days in the S&Ps, I mean, it is a counter trend move, right? But the day time frame moves have been trending. And I can understand why most retail traders have a very difficult time in these types of situations, because you're going to have to buy higher in a market that's moving to the downside in the longer time frame. It's much easier for us to try and pick tops because we haven't traded up to those levels yet, or we've just put in a new high and we're going to take a look at taking that short, and we're going to get run over and run over and run over. So sometimes doing the more difficult thing is really what we want to do. And this morning, watching the S&Ps, the opening, we opened with a gap, no attempt to close the gap. I said in Make Hope Money, I said, this market is going to try and keep us out of the long side, which it pretty much did all the way up. Now, of course, we're ranging a little bit here and things might change a little bit, but when you sense that market is attempting to try and keep you out, that's important information. You don't want to fight markets that are directional in any direction at any time. And you got to look for those reference areas that you can lean on.
Good point. Hey, Rodney, take it easy. Dogs, he's still at the door. I can see him right there. Hopefully this stops soon. Well, yeah. How many
He's
people?
A killer.
I know he's a killer pug. All 25 pounds of him. I'll go over and get him if it continues. But think about how many people got ran over trying to pick shorts on the way up to 4,800. 4,800 was an S&P level that I would not have imagined would have traded. If we talk about during the pandemic recovery, something I wouldn't have thought we saw for years. We'll still see it at some point, I hope. But
and these markets are so resilient these days too, right? And like that's one of the major changes. I mean, I'm kind of going off topic here, but major changes we have seen over the last decade or so in these markets is accessibility and the resilience. It's not the small group of couple hundred guys standing in the pit making every trade. It's accessible. We know the retail trading world, obviously more than just futures, is up 300% over the last 3.5, 4 years. So we've had massive increases there. We have accessibility that's never been anything like this, down to being able to do it on your phone like it's nothing. When I first got into this, if you didn't have your computer hardwired to a wall, like the boss said, no trading, costs of entry, the barrier to entry is down. So it's opened this opportunity, which has made these markets a little bit more resilient, which I think is phenomenal. And we do get to see these moves happen, and you can take advantage of it.
So there you go, counter trend. We'll have to read the article, by the way. I don't know if it's posted yet, but it's How's Your Fade Game? Check it out on the Topstep blog. Speaking of Topstep, Dan, I can let you continue here. We have an exciting announcement that you may have gotten an email about today. Shoot, Dan.
Absolutely. Well, one of the themes that we've been talking a lot about, if you kind of tuned into our Q&A with Michael and I last week, is funded traders and making sure Topstep funded traders are taken care of. And well, with that being said, we've heard the feedback that everyone hates going back to step one once you've been funded. Well, that's now out the window. If you've been funded, you can go back into step two. There are some stipulations around this, but right now, if you've ever been funded with Topstep, email Topstep right now, and we can get you into step two account. And going forward, you'll always return to step two from the funded level. So that's pretty exciting. Yes, there's still step one. Yes, that's there for a very particular reason. We want to, first focus on learning your platform, generating some profits. Once you've gotten comfortable with that, we'll keep you in that step two account and never send you back to step one.
Oh, thank you for that, Dan. JD, you look like you're about to say something.
Oh, I was just going to mention there's another friendly blog article about the step one rule on our website also. So go ahead and check that out.
Excellent. Well, good stuff all around. Let's end it with a quote. Shall we?
Absolutely. I got one from a guy. I don't know if anyone's ever heard of this guy, Paul Tudor Jones. I think he's been around. I think he's been around the block.
He's got Bruce Willis's shoes. I know that guy.
And he says, don't focus on making money. Focus on protecting what you have. Simple, to the point, and could not agree more.
Yeah. And that guy knows how to trade.
In essence, he's saying always trade for tomorrow.
Good point. We'll see you next week. Until then, stay safe, trade well. Have a great rest of the week.